first year we created Flatiron Parties, we send out, my partner Jerry Colonna, his sister was a ceramic artist, and she made like 100 of these, and we sent them out as end-of-year Christmas gifts. And people really liked that. That was an early memorabilia. So in '96 and '97, things were starting to percolate, and there were a lot of interesting people starting internet businesses. And here in New York, there was a lot of startup activity happening, but it really hadn't captured sort of the public's imagination. And it really wasn't until Netscape went public, and then we had just all of a sudden a rash of public offerings, and all of a sudden the general public was starting to get in on what seemed like almost like going to the casino. You know, you could buy stock in these companies that were going public. You could buy them at $15 a share, and the next day they were trading at 50 or 100, and it just seemed like everybody wanted in on that action, and that started to really feed back into the internet startup ecosystem, and everybody wanted to either do a startup or join a startup or invest in a startup. And by '99, it was just a full-blown mania. Here's the Street.com. Street.com went public in May of '99. The original price was $19 a share, traded up to some ridiculous amount of money. You know, it just was mind-boggling that these companies could appreciate in value. There were literally hundreds of companies with multi-billion-dollar market caps who had, you know, a trivial amount of revenue, or even in some cases no revenue. And you know, there was this whole thing, it's different this time. You know, this is the new economy, and people were kind of diluting themselves that this could actually be a new way that business was going to work. But I think a lot of people deep down understood that the party was going to end at some point. This is a picture of the original Flatiron and SoftBank Ventures team in 1996 in Harvard Square in Cambridge. And the people in there are Brad Feld, now the managing partner of Foundry, Charlie Lax, now the managing partner of Grand Banks Capital, Jerry Colonna, Gary Rochelle, who's one of the leading venture capitalists in China, me, and Rich Levendove, who's one of the managing partners at Avalon Ventures. I really should have had this framed or something. I mean, it's like a tragedy that this picture is like warping. This is the first BlackBerry I ever used, circa 98. That was when I began my BlackBerry addiction. Does it still work? You know, you need batteries for it. This was on the RCN network. Yeah, we had a bunch of companies in our portfolio in '99 that were burning through $1 million a month or more. When you think about that, that means you got to invest $12 million over the course of a year just to keep the company alive. And that was not, we were not the only ones guilty of that. I think across most of the portfolios of venture capitalists who are investing in web-based businesses, they had that going on in their portfolio. You know, when you're making, you know, $300 million exits on companies that you invested at a $10 million valuation, the idea of, oh yeah, we're going to burn through $12 million this year on this startup, it doesn't seem that crazy. Of course, when the whole thing came undone, we all kind of woke up like with a hangover and said, geez, what were we thinking? And I think most everybody today, you know, just has this incredible, you know, knee-jerk reaction against anything that feels like it felt like back in '99. We all learned a valuable lesson, and even though we may have participated in another mini bubble, I don't think anybody, you know, fell back on those kinds of bad habits. This is Gamesville, one of the many companies that we both invested in and sold it in 1 year in 1999. We put the original investment in March, and I think by October we had sold it to Lycos. That was the first web-based gaming company. GeoCities merged with Yahoo, May 28th, 1999. $3.5 billion. Single best deal I ever did. Well, anyway, there's lots more there.